धन्यवाद।
श्री विजय बहादुर सिंह।
Thank you, Mr. Chairperson, Upadhyay ji. You see, in this regard, I have only few submissions. Firstly, kindly see this is a composite formula. There is an act known as Reserve Bank of India Act 1934. Then there is another act, it is called the Insurance Act 1938. Then Securities Contract Regulation Act 1956. Then also Securities and Exchange Board of India 1992. These old acts has lost their life. Their shell life has finished. What I want to focus, the time is very right that the global economy, so many matters are coming up. Why not the Honorable Finance Minister with all mechanism should make a comprehensive act covering all these matters. Otherwise, amendment after amendment is like that operation was successful but the patient died. In so many amendments, the real soul is lost. My respectful suggestion I want to add that let us think on the line, draft act which caters the latest economic needs and financial necessity. Number one. Number two, I totally agree that when the bill, when in the summers when the parliament was not there is catena of Supreme Court cases that they have a power to issue the ordinance, and since these money matters are very sensitive, if you have taken that steps, it's nothing wrong about it. The intention is good, because we have a feeling there were a lot of spurious insurance company in the country siphoning the money from the poor people and all that thing, and there was no security whether they will be able to pay or repay, and the poor men were suffering. There is no difficulty about it. But what I want to say, in every enactment, just only a line I would like to draw, the statement of object and reasons which the Honorable Minister for Finance has said. The Securities and Exchange Board of India Act 92 was enacted inter alia to provide the establishment board to protect the interest of investor. The Security Act is to protect the interest of investor. Then the another act says, the Insurance Act to protect the persons who are insured. All these acts are there to protect those depositors. What I would like to suggest, that the committee, this joint mechanism, which is headed by the Honorable Union Finance Minister as ex-officio chairman, and then A, B, C, D, E, just I will read it hurriedly. The A is the Honorable Finance Minister, the Governor of Reserve Bank of India, C, the Secretary Department of Economic Affairs, the Secretary Department of Financial Services, the Chairperson Insurance Regulatory Development Authority, the Chairperson and Regulatory Development Authority. In these six forums, the investor is missing. The entire act, all those four acts are focusing to protect the interest of investors, depositors. I would like to have a thinking or a relook. Let some representative or economist or anybody forum from the side of investors. Otherwise, we have an experience in the earlier ministry, I think, on the NDA, etc. At time the ULIP matter, the 64 unit, there is wrong investment policy. All the investors, about 3 crores, were in difficulty. So I would like, in this joint mechanism, the investor who is the real soul for which the entire exercise is going on should be there. And so far as by and large, I don't think there is anything wrong in this matter. The only the investor should be present. By this I want to conclude. Thank you very much.
Shri